There has just been a huge global shift over in Japan, which has ramifications for the global markets and crypto. This is hugely positive news for Bitcoin, which is moving up 2.3% at the time of recording. What has just happened in Japan? This is a rug pull for traditional markets, but a huge boost for Bitcoin. We're going to break down exactly what happened. What does this mean for the wider markets and where I expect Bitcoin to move from here? You can see here the Japanese yen is moving up 3.5%. We've got Bitcoin up 2.25%, bouncing from a key level, which we're going to get to. But why? Well, it starts off with this. Traditional markets are not happy overnight. The Bank of Japan shocks global markets with a bond yield shift. In order to understand what is going on, we need a little bit of context. Japan is the only economy right now when all other central banks are tightening policies, they're increasing interest rates. Japan is still printing money. They're still stimulating their economy. They have negative, just slightly negative interest rates in this environment. Now, what happened was a huge shock. Markets were expecting Japan to keep this focus, but they've moved to a hawkish stance. And this all centers around their yield curve control, also known as YCC. Effectively, Japan like to keep their target 10-year bond yield at 0%. You got to remember, the lower the yield on your government bond, the more you're encouraging your economy to spend. Japan have had a problem of stagnation for a very long time, and so they're very keen to increase inflation. Yes, their policy over the years has been to get people to spend more. They've been struggling, right? So they want to keep their bond yield lower. Remember, if bond yields are higher, people don't want to spend. They'll go leave their money in the Japanese government bond and they're going to get a great return. So the Bank of Japan have always wanted to keep this target at 0%, and they have these caps. And previously, before the update today, this cap was sitting between 0.25 on this grey line where my cursor is, down to this grey line here at minus 0.25. So they would want to keep it between minus 0.25 and positive 0.25. In a shock announcement, they've increased this yield cap to 0.5 to minus 0.5. So they've doubled the movement that the yield can have. What this means is the yield has now spiked. The Japanese government bond yield has spiked, and now more people will be looking to save as opposed to spending. Now the question arises, why would Japan do this? Japan is a country which is focused on eradicating stagnation. They want people to spend, right? They want to generate inflation. And finally, what this actually means is that Japan, the final economy, the final major economy that is sitting there, not worried about inflation, has finally awoken to inflation. And this has got wider markets now extremely worried that this inflation issue will not just be transitory, but could be entrenched. But this could be great for crypto. And I'm going to explain exactly why, because if we jump on straight to the Bitcoin chart, we can see a positive day today. But why? Well, let's take a look. Right? The Japanese yen is up 3.46. People are flocking to the Japanese yen to go lock it up in the Japanese 10-year bond because the yields have gone up. You're getting a better return. So there's more demand for the Japanese yen, less demand for the dollar, creating a weaker dollar index. A bad day for the dollar index. And this is now significant. Look at that weekly candle here on the dollar index. Remember, dollar index is inversely correlated to crypto. Every time we've had a major weekly candle rejection and a big movement to the downside on dollar index, crypto has benefited. Crypto went on a huge run in this period, and it went on a huge run here through the pandemic period as well. Since then, the reason we've been struggling is the dollar index, which is a sign of risk-off mindset, has continued to climb in a parabolic fashion, eclipsing the two previous peaks. But since we saw in the daily trend, we managed to beat the EMA ribbon to the downside. And now on the weekly candle, if we can get a close in the next 3 days below this EMA ribbon, we've got a weekly candle flip, which is a huge sign here for the dollar index rotating to the downside. But more importantly, if inflation is going to be a longer term worry, not just something which is going to be eradicated in 6 months, this is positive for Bitcoin because Bitcoin is seen as this narrative of anti-inflation. Now, short term, we understand Bitcoin wasn't doing so well. Why? Because Bitcoin is seen as a risk on asset. But longer term, what is the narrative of Bitcoin? It plays this duality of narratives. Bitcoin acts as a risk on play, at times when people want high yield, but also as a longer term narrative for the holders, the bottom base of people who hold crypto for a long period of time. They understand it's a hedge. It's an antithesis to traditional finance, to the normal markets, to the US dollar, to Japanese yen, to fiat currencies, right? So this is a huge shift that we've just seen, which a lot of people are overlooking. If Japan have decided that inflation is getting too high and they need to increase the cap for their government bonds to encourage people to spend less and save more, then what does this mean for the rest of the economies who have been facing this issue of inflation already? Could they be underestimating it? And this is why we're seeing the traditional market suffer. We're seeing Bitcoin get a key bounce. Now let's take a look here at the hourly chart on Bitcoin, because I want to show you that this bounce hasn't just happened at a normal level. And what we can see is, I said that when we fell from this rising wedge pattern, what is the first price target? I said it's the horizontal line. Look at the support to the left-hand side, 16,240. That is where we're getting our test of support now, which is really positive. But we've got to get above 17,500 and build some support. This is meaningless if we just hold there, hang for a little bit, and then fall. Because if we fall, then we're looking back down at 15,500. So we need Bitcoin to continue to advance, but more importantly, we need no other Bitcoin-specific narratives, right? We don't need any more from this guy, Sam Bankman-Fried. We don't need any more drama from another project or a company going bust. We need Bitcoin to be able to follow the macro trend right now, which is that the Japanese dollar is showing strength, the US dollar is showing weakness, and maybe some of that cash is going to rotate across to Bitcoin. Hugely positive day for crypto. A lot of people are not making that connection between what has just happened. Yes, it's bad for traditional markets. That's why you're seeing a sell-off. But in the great scheme of things, if Japan is starting to understand there's a deeper inflation worry here, crypto will benefit from that long-term narrative. Because if dollar index can have its weekly trend flipped, if it can have a sustained weekly candle move to the downside, if I just show you this on the daily, this is the daily chart here on the dollar index, and you can see we're substantially now below our EMA ribbon. But if this trend can now carry itself over to the weekly candles, this could set up a nice long protracted move of the dollar index back down to its EMA ribbon, let's say at $98, which could signify a big move for crypto in that space. So a huge development, definitely one that a lot of people are overlooking right now. Take a look at this. You can see here that the US dollar versus the Japanese yen, the inverse of this, you can see that when the blue line is getting stronger, that means the Japanese yen is getting stronger to the US dollar. That is what's happening right now. Now, typically, Bitcoin is correlated to the Japanese yen. When the Japanese yen shows strength, you tend to see Bitcoin doing quite well, which is interesting. Similarly, when yen is having weakness, you see Bitcoin having weakness, like you can see on this chart. Now, the question is, will this start to keep up? Will we start to see this trend play out with Bitcoin following behind the Japanese yen? Definitely an interesting story, one for the wider markets to pay close attention to, because if Japan are starting to wake up to the fears of a potential long battle with inflation, does this mean the rest of the global economy is neglecting it? And more importantly, does this now mean that Bitcoin can decouple from this treatment as a risk on asset and simply move against inflation? So if inflation is going to be entrenched, can Bitcoin finally focus on being the narrative, which is this anti-inflation, anti-traditional finance, anti-fiat hedge, and therefore benefit from that strength in Japanese yen and weakness in the global battle against inflation? Hope you guys enjoyed this video. If you appreciate these updates, don't forget to smash on the likes, don't forget to subscribe, check out this video here, and I'll see you in the next one.